We're top 4 in terms of GDP, only after US, China, and Germany. There's a capital outlay of close to 11 trillion for FY 2026 that was announced by the finance minister. And you look at it across sectors. In the renewable sector, we have to hit 500 gigawatt by 2030. That's the target. In the port sector, you have the maritime vision for mega ports in Gujarat, Maharashtra, and several other regions. The entire national highway sector has to reach a peak of 2 lakh kilometers by 2037.
So credit limit is based on how much CO2 emission. Because of your spending, CO2 emission is getting added to that.
You have to spend less than to.
Yes, that's because you know what product you are buying. Suppose if I am buying something which will have more CO2 emission, my credit limit will go down, and after a particular point of time, your credit card gets blocked.
Hello there, good morning, good afternoon, good evening, depending on what time you're watching this podcast. Welcome back to Transforming India, the road to 2047, presented by Mint in partnership with JSA Advocates and Solicitors. I am your host, I am Alokesh Bhattacharya, I am Deputy Managing Editor of Mint. Let's take a look at the context first. India's BFSI sector sits at the heart of the country's economic and infrastructure ambitions. After a decade of rapid expansion, the system is now entering a sharper, more regulated phase. The RBI is reinforcing stability while keeping credit flowing through liquidity boosting measures. Banks, NBFCs, and fintechs are no longer just financing growth, they are reshaping India's financial architecture. Together, they are powering infrastructure investment, widening inclusion, and building a more transparent, resilient credit ecosystem. So, to unpack all of this, I am joined by two experts who work at the intersection of India's financial regulation, debt markets, and infrastructure financing. First, we have Karan Mitroo. Karan is a partner at JSA. He has almost 18 years of experience advising on foreign and domestic debt financing. He has worked extensively across renewable energy, power, ports, transmission, steel, and manufacturing sectors. Karan's clientele includes leading banks, financial institutions, as well as global infrastructure investors. Joining Karan and me today is Nand Gopal Anand, also partner at JSA with nearly 19 years of experience. Nand specializes in banking and finance with deep expertise in external commercial borrowings, project finance, trade finance, and cross-border transactions. Nand has been closely involved in complex financings, restructurings, and regulatory compliance of banks, institutions, and corporates. Very, very impressive, you will agree. And these are two very top-notch lawyers that we are sitting here today to discuss the financial system of India, and we are privileged to have both of you with us. Thank you, and welcome to the podcast, Karan and Nand. So let's dive straight into the questions. I think let's do a quick, a rapid fire, what we call a rapid five first. Sure. So 5 questions directed at both of you, and both of you need to answer all the 5 questions. Okay?
Sure.
So let's shoot. The first question is, RBI and SEBI, our two big guardians, are they conservative or progressive?
They have been rather, I'll say, in the last few months, very progressive. I'm using the word especially very progressive. Of late, we have seen so many regulations which has been coming in. They have come out with various regulations whereby liberalization has been taking place. They are trying to regulate lots of things which was earlier not there, be it with respect to NBFCs, cross-border transactions. Recently, the best example is ECB framework. Right. Draft guideline is there whereby Indian banks, and since the focus of the government has been GIFT City as well, so there the certain institutions and the banks in GIFT City will be given those powers to do acquisition finance and all. Indian banks will be allowed to do acquisition finance and all.
Yeah,
so this is
a
a great
thing, right?
boost for Indian banks.
There's going to be a new thing. Indian banks were never allowed to do that.
Yeah, no, I'd have to agree with Nand. Both these regulators have been extremely progressive in the last decade and have moved with the times that's required. But they've also added a touch of caution to it, which also is required in the Indian landscape.
Correct.
So Nand spoke about the ECB regulation and acquisition finance. But from a SEBI perspective, I think the single biggest change they've brought about is the advent of InvITs. because the current AUM of InvITs is about 9 trillion INR, expected to grow threefold to about INR 25 trillion INR by 2030. That's
In
a lot
5
of
years.
capital,
Yeah.
coming through. And not only have they brought about InvITs, but they are listening to the stakeholders and understanding the requirements on ground. And basis that, I mean, for example, what they've done is they've reduced the value of each unit of an InvIT, which gives mass appeal to InvITs as a product. And most recently, they've classified REITs within the ambit of equity.
Yes.
What this does is it allows mutual funds to invest in REITs, and it's also expanded the base for investment within the InvITs, because the pool that was left for REITs and InvITs is now left for the InvITs as well.
I think some of these, you're right, about the treatment as equity. Some of them are also being considered to be a part of the indexes, right? The benchmarks, the Sensex and the Nifty 50.
Yeah,
If they are treated on par with equity.
Yeah,
Further.
Exactly. And I think, those are steps that will come up with time, because, REITs and InvITs is an animal which is not understood by the common person. And it's such a beautiful product because it deals with mostly operational assets, so that's low risk. And at the same time, it's giving a yield somewhere between debt and equity. So I think boosting REITs and InvITs and the way SEBI has played its role in that has been absolutely fantastic.
So a very, very positive vote from both our lawyers on RBI and SEBI, and probably something of that has got to do with the fact that both the gentlemen who are leading those two institutions have come from the Ministry of Finance at more or less the same time. And both of them were involved in the budget preparations every year, year after year, for quite a few years.
They probably understand the pain on ground.
Yeah, they understand the pain. Yeah, correct. All right, let's move to the next one. Infrastructure financing. Is it rising or peaking?
Definitely peaking.
Both are positive actually, rising or peaking, or maybe.
No,
is it
I think
peaking?
peaking means that it's hitting its end, but it's a boom story in India right now.
Yeah.
We're top 4 in terms of GDP, only after US, China, and Germany. There's a capital outlay of close to 11 trillion for FY 2026 that was announced by the finance minister. And you look at it across sectors, right? In the renewable sector, we have to hit 500 gigawatt by 2030. That's the target.
Yeah.
In the port sector, you have the maritime vision for mega ports in Gujarat, Maharashtra, and several other regions. The entire national highway sector has to reach a peak of 2 lakh kilometers by 2037. So whichever sector you're looking at, there is just an insane amount of funding required. And I think estimates are that infrastructure financing requires about 143 lakh crore by 2030.
2030.
And 70 to 75% of that has to be met by debt.
I mean, infrastructure financing has been going on for some time, but I think over the last 20 years, there have also been some really bad experiences, right, of projects not working, and the gestation period has been far too long.
I mean, we faced that. We faced that with the road sector in the early 20s.
Yeah, exactly.
We faced that with the thermal sector, with some projects going down.
Yeah.
But I think, as I said, the regulators are learning and coming out with progressive regulations.
Yeah.
One important thing which I would like to add, since you are talking about infrastructure, we cannot leave behind data centers the way they have been coming up, and which is one of the important aspects. You go around the corners of the India, especially if you see NCR regions or Maharashtra and all, and even in South, lots of data centers are talk of the town, and there's a big time development which has been happening around that. And even government, especially there's something called PM Gati Shakti program, which they are coming with, which is definitely the way we are looking forward for having a Viksit Bharat by 2047. All these things plays a very important role. Infrastructure, definitely, when we say how progressive it has been, as you said, well, there was some slowdown because of certain regulations and all. That's why regulation and development has to go hand in hand. And fortunately, the regulators, government are trying to liberalize on certain things so that infrastructure development and other development in and around, be it airport, be it roads, takes place faster way.
And I think some new institutions have also been created, right? The new DII has
Correct.
been,
NABFID.
DFI has been
NABFID.
created, NABFID,
Correct.
which is also doing great work. Right, so next move to the next question then. Debt money is coming from where? Which jurisdictions is debt money flowing into India from today?
Easier to answer where it's not flowing from in India right now.
Yeah, I was thinking about that because I was thinking debt money तो हर जगह से आ रहा है.
Yeah.
So
No, because geopolitically, India is placed at a position where there is so much of interest within the Indian market. So we're seeing money come in from Japan with the likes of MEFG, SMBC. We're seeing money from Singapore with DBS. We're seeing the French, being interested in the Indian market. And a lot of money is coming from the DFIs, whether it's IFC, ADB, AIIB, and institutions of that stature. In addition to that, what we're also, getting excited about is the credit enhanced bonds that are facilitating growth of the Indian debt market. And institutions like Guarantco, which is part of the PIDG group, is one such example, where they're providing credit enhancements to boost the credit rating of a facility for lending by banks to a borrower. So banks typically would not lend to those borrowers, but because of this credit enhancement, that capital is also flowing in.
Even financial institution in India, they need the fund, and we have a concept under the banking parlance, we call it a resource raising.
Yeah.
So there is a tie-up with because since everything is, when we talk about BFSI sector, debt is something, one of the important component. And as Karan was mentioning, well, you cannot restrict the jurisdiction, but yes, 2-3 jurisdictions have been very prompt on that. Even when I say resource raising there, US has been also very, very important place for raising the fund from there, because interbank transactions, when it happens, at the end they borrow from those banks and they pass it to the Indian market and all to the borrowers, and then Indian banks pass it to the customers and all. So that is very something which has been always incoming and welcoming move from these pockets, I'll say, and few of the countries which has been very active on that. And even the banks have that comfort to borrow from these institutions and banks being in these countries.
And some of them have been lending for a long time. Like Japan has been, engaging with India quite a long time. I remember the dedicated corridor that was coming up. That JICA was involved in it, right? It was about 15-20 years ago. So they've been working on it.
No, so that's why of late, if you have seen the Japanese banks, they have been very active on recently. I mean, so that is the news which has been in that talk. Acquisition by SMBC of the for Yes Bank investment and all. It was a good investment, and again, this Japanese bank has that confidence in the Indian market. There were certain other also in the process which didn't work around. Some other banks were also in the process to acquire certain stake in Indian banks. So that way, if you see, Japanese bank has been very prompt, and they want to have good share in the Indian banking sector.
Right.
So that's something that's a good move for Indian and banking finance sector.
You were going to say something.
Yeah, I think the kind of targets India has for green financing. Most of these international banks also have targets to promote green financing.
Yeah.
So it's a win-win, which is why you're seeing so much of money flow into India.
Okay, let's go for a compliance worry. What is the biggest compliance worry for BFSI?
If you ask me, ESG compliance.
ESG?
Yeah, that's very critical and important. And because since Karan spoke about green finance, and that's where everything is linked to ESG financing also. Though you get the benefit of green finance and ESG finance, but you need to comply with certain conditions, because certain benefits are passed on to the banks and further to the customer. But those benefits are to be, or compliance is to be taken care of. Then cyber security, that's again one of the important aspect. Then your data privacy, those things also turns out to be something which has to be looked for and to be taken care of.
And now data privacy with the law has also been notified.
Correct. Yeah, no, I'd have to agree with Nand. I think cyber security, with the number of frauds that are happening and the kind of people it's impacting, I think that's one big story. Data privacy with the advent of the DPDP Act, I think banks are going to have to really understand how to work with it, because it's per action consent requirement under the Act, which is going to be tough to
Which is
comply
true,
with, right?
Absolutely.
And in addition to that, I think artificial intelligence and the laws that are going to come around artificial intelligence, especially how they drive financial decision making if it gets to that. I think these are key areas which are compliance worries because the banks are moving ahead with technological advancements, but at the same time they have to use these laws to safeguard, the customers and their own systems.
Yeah.
So on AI, I'll just like to add, this may benefit the banks and the customer, but so is the case. We have the fraudster also in the system. And that's where it becomes very critical for banks to ensure that that's not gets misused because again, we have lots of financial data which stays there. So that is something which is very critical for banks to take care about it.
Is ESG really that important? Because what happens is after Mr. Trump came and the whole thing swung the other way, and we were saying ESG kya hai, forget it. And even some of the investments based on ESG parameters that were done earlier have not really given the kind of results that they were expected to. Is something that I had read in Europe and all. So in India, are we stepping back from the ESG mandate or are we still there?
No, we're still there. I think we still have a target of net zero by
Yeah,
2070.
that we have.
And we're going to continue to, have that target. And honestly, ESG is something that the country needs from the perspective of moving from a developing to a developed economy. So I think ESG compliance is here to stay.
So to answer to your point, whether it's going to stay or not stay, recently we concluded G20 summit, and there again the climate related to climate change and all, something declaration was signed. So if our country is one of the entity who is approving of it, that means government is very conscious about it. Having said this, 4-5 years down the line, when I'm talking about debt, and when I go into the debt, I talk about I'll go a little into the document. There was certain things which have been specifically been structured so that ESG guidelines and certain clauses are put into the document so that the parties, as I said, there are certain benefits which are passed on by the bankers to the customers, and they have been asked to follow those compliances. And that's where it gets important and critical for institution also to follow, because as we have to take care how the World Forum is seeing the climate change and all, and it cannot be ignored. Something, even if you want, it cannot be ignored. The cost of development also, that's something which government and the institution will have to take care of.
So we just have to stick to the path. The IBC, Insolvency and Bankruptcy Code, is it a boon or bane?
So
I'd like to know what you think about what we're going to say.
It's a boon, definitely.
It is a definite boon. I agree.
100%. I mean, but there are tweaks that can be made, right?
No, I think, since the advent of IBC, the time period for enforcement has shortened tremendously. We're still not there. I mean, the statute provides a designated timeline. We haven't reached close to that. But from what it was pre the IBC regime, the time period has shrunk. I mean, there have been about north of 1100 resolutions. Creditors have recovered close to 4 lakh crore of debt. But I think the single biggest change that IBC has brought about is the shift in mindset.
Yes.
Because the IBC is a creditor and control regime, which means that once a company is admitted, then the lender and the resolution professional have control and the debtor is out of the game. So defaulting companies actually have to think through thoroughly as to what they do, because and that is the sole reason why I think there is a paradigm shift in mindset of how India Inc. is working right now. I think that's the single biggest change. Of course, there are always amendments that are welcome to enhance the process further.
What could be done to make it better?
rather I'll say things are being done to make it better. 2016, we are in 2025, almost 9 to 10 years.
True.
And we have seen so many amendments happening. For institution also, it was something new to the industry. And gradually courts, tribunals, corporates, everyone realized there are lots of things which needs to be done. And thanks to our regulators, thanks to the courts, they have come up with certain pronouncements for better understanding of the law, how it has to work, because we can not just say that what maybe the situation in different countries may be the same situation in India. The Indian banking system and situations are a little different. So fortunately, the code has been modified to a great extent, and it is getting suitably modified and amended to suit the requirement of the industry.
Yeah, thanks. I mean, that was an extended rapid fire, but it was good because, you know, the kind of insights you gave were really very useful. Didn't really want it to be just a one-word answer kind of session, you know. So now we get into the main session. Now we have 5 questions. These are slightly broader questions. So, Karan, maybe you can start with. What are the trends that you see that are shaping the future of banking, fintech, and NBFCs? Basically, what are the trends, the key BFSI trends that you see?
Yeah, so as you know, I was thinking a question like this could take me about an hour, 2 hours to
Yeah,
answer
yeah.
and still not end. So I'm going to restrict myself to about 4 or 5 key new trends that have come up. The RBI project finance guidelines. So we were talking earlier about, you know, bad assets in the thermal and the road space, and even real estate has seen its fair share of bad loans.
Yeah.
Keeping all of this in mind, RBI came out with a framework for project finance to regulate the projects in which banks can lend, and you know it has certain guardrails mentioned, pursuant to which banks should be lending in those projects. RBI had come out with draft guidelines last year, and if those guidelines had come into force the way they were, it would have probably been the end of project finance in India because they were so stringent, right?
Okay.
But as I mentioned earlier, the regulators take industry feedback very well, and you know we've also made these representations through various bodies, pursuant to which the revised guidelines provide you know a more balanced approach to project finance. There are still certain things that we would want the RBI to amend, keeping ground realities in mind. But I think the project finance guidelines is one major regulation that has come about. Nand spoke about the ECB and the acquisition finance draft guidelines that are there, and they will definitely boost, you know, corporate finance coming from outside India, and acquisition financing, because these are the two things that you know these guidelines permit. And it has finally expanded, you know, the borrower base. So as per the draft regulation and our read, InvITs can now borrow ECBs, which was not the case earlier. They have removed the concept of capped interest rates, which is what it should be. It should be commercially driven, and brought about, you know, many such changes. So I think with these guidelines, and you know, we're examining them and again providing suggestions of how to make it better, in our view at least. But I think this will also boost corporate lending in India. The third is the DPDP Act. We spoke about it briefly, but as I said, the DPDP Act states that you have to have consent for each specific purpose from the customer and not a generic consent.
Yeah.
So the banks will have to sort of beef up their systems, understand what data they need to store, what data they should do away with, and come up with compliance for this. And certain provisions of the Act, you know, permit the regulators to bar certain jurisdictions, which will, I think, also enable data localization.
Yeah.
You know, which is where a lot of the data centers, etc., will also sort of become important.
In a way, it's good, no, that you can, you know, banks have to choose which data to keep, because otherwise they were storing everything that was coming their way. It was also overloading their own systems.
It is good, but you know, they will have to start that process of segregation.
Yeah.
And
That is going to be complex.
That is going to be complex, because the hoards of data that is already available, for their own protection, they need to ensure that they don't have unnecessary data.
Yeah.
You know, going forward. So it's going to be a long run process, but I guess a much needed process, and hopefully, you know, we get a few lesser spam calls in a couple of years once this is fully implemented.
Wishful thinking, you know, we've been wishing for that for. Of course, there's been a lot of changes these days.
No,
Yeah.
even
You wanted to
I'll
add
just
something?
add one thing. See, things doesn't happen a month, 6 months. Or we may have regulation in the last 4 or 5 months. If I talk about NBFCs, NBFCs is a large framework, which large framework exposure which came a year or two before. Earlier, there were no such things specific for NBFC. They were, but not so explicitly clarified and all. So that's something which gradually regulator has coming with lots of regulations for NBFCs. So it becomes easy for them to, they are more regulated now. Digital lending, again, there also lots of regulations where clarifications, because for fintech and all, whosoever are into digital lending, so lots of platforms and all, which have to be guided and controlled, what all sort of precautions they need to take with respect to those things. Also, regulator has come up with various guidelines. So that way, gradually we are moving ahead with every passing of the months and time, and the way we are seeing the digital India, the way we are penetrating into digital India. So digital lending also has picked up. So the regulator is also conscious about it, and things have been being taken care of by them.
Great. Okay, so the next question is for you. And that is the project finance. We were talking about project finance, right? But project finance today, it's adapting to tighter supervision and evolving risk norms as well, right? So, but how are the deal structures changing? Because when the regulation changes, you also have to tweak the way the deals are going to happen, right? And you are in the thick of, both of you are in the thick of this, with your clients. So tell us about what's happening over there.
Karan partially covered about it. Initially, when this regulation came, there was a little panic in the market, to be very honest. And as he was mentioning that we did some sort of presentation, not present, rather we'll say interaction with the customers and the clients to understand what is the feel we are getting from the market participants, be it the finance institution, be it the entity who are executing the projects. And even they were unclear. Gradually, things are settling down from 1st of October when things have come into effective. Now the borrower, even the lots of real estate developer, instead of just launching the whole project in one go, they are coming in phase-wise manner, because then it's easy for them. Even the banks are evaluating, well, what sort of risk is there. In that way, they are segregating and choosing the borrower very carefully. Now, one important thing with the regulation talks about tying up the funds up to 90%, which gives the comfort to the lenders also that the funds has been tied up, and the visibility of the project is very clear. Right. And especially with respect to DCCO and all, also that's a date for completion of the project. That's also certain timelines are being given, or they are allowed to extend once and twice, correct, if I'm not wrong. And that way the regulation has been stricter, but in a sense to see that, because I think initial of our discussion, somewhere you said, or either of us has said that projects used to get installed. All this has been thought through, and we have seen how things has been happening. To mitigate all these things, certain regulations, these PF directions has come, which so that the project gets completed on time. And I would like Karan to add something, if from the experience which he would have seen in the transactions and all, that will be better.
No, absolutely. And, as I said, I think the regulation was required. But again, there are certain ground realities, that the regulator needs to watch out for. For example, one of the requirements is that you have to have 75% land available upfront.
Yeah.
And land acquisition in India is a very painful process, and most of the developers would not be able to achieve this in several sectors. So risk mitigation is important, but an out could be that you have pro rata disbursement to the land requirement instead of saying that you need 75% land upfront. Okay. Similarly, the provisioning that has been there on extended DCCO. Now, certain projects are derailed because of issues on land, and it is no fault of the developer that the project is delayed. But that additional provisioning will result in higher interest rate for the developers. So maybe some mitigants to that effect. So these are the things that you have to understand. And I understand as a regulator it is difficult, right? Because each sector has its own problems. Yeah. But I think over a period of time, there has to be certain segregation, and certain sectors which are low risk sectors have to have more beneficial guidelines to them, instead of having one fit for all sort of guidelines.
And I'm sure our regulators are also tuned in and listening to all your suggestions, and they're all very good and valid suggestions. So in fact, the next question is for you, Karan, and that is on green financing. We're back to green financing. And climate targets and green finance has become really central to India's climate and energy transition. We've been
Yes.
talking about energy transition, not just talking but doing also on the ground. A lot of stuff on energy transition. But how is it changing or shaping banks' lending strategies, right, and helping meet the CO2 reduction targets?
Yeah, so I think, one thing I'm proud of as an Indian is the kind of commitments this country has towards green energy and green finance, right? Because I think the kind of commitments we've laid out and what we've already achieved is very, very significant. Uh, as I said, we have a target to be net zero by 2070. It's a very, very aggressive target. We have a 500 gigawatt target by 2030. So to that extent, regulators again have been at the helm of affairs and come out with guidelines to promote green financing. For example, RBI has permitted priority sector lending in to a certain amount in renewable energy projects, which basically means that banks have to lend to that amount to meet their PSI targets. Similarly, there are disclosures required by banks as per the RBI guidelines of how much they have contributed towards green finance. And banks like SBI have given a commitment that I think 10% of their book would be in green finance in the next 5 to 10 years. And several other banks are following suit. SEBI is not far behind. They have come out with a framework for green bonds.
Yes.
We were fortunate enough to do the first green bond of the country. This was in the COVID phase, and they have moved forward with those regulations and enhanced those regulations to promote green finance. That is from a regulatory standpoint.
Yeah.
But India Inc. is also at a stage where it needs a lot of capital coming from outside India.
Yeah.
And as I mentioned, most of these players would, have their individual targets of green finance. So by that very fact itself, most of the developers have to adhere to those green finance guidelines when they're raising money from your Japanese banks or your multilaterals or any of these institutions. And there are targeted financial products like sustainability linked bonds that have come about, which provide reduced interest rates depending on targeted CO2 reduction. So guys like Vertis have raised these bonds from IFC. I think Cube has done something similar. So I think all of this is targeted towards enhancing green finance, and I think there's a lot more action we're going to see in that space.
Could you add something?
Yeah, sure. In green financing now, we also hear the concept especially in the real estate developers, they also try to push into the market that we are coming with a green building.
Yeah.
So that's something very something prominent, and then definitely.
And they're charging more for it.
Yeah,
Green building.
and not only that, given the situation we face, especially in NCR, so you need. When I say NCR, today we are talking on a particular timeline when we are talking about air pollution, whatever you may quote, may not quote. But yes, when it comes to green building, it plays a very important role in reduction of that. And one very important product, because Karan was mentioning that various product which banks are coming up with, I'm sure each of us use a credit card. Your credit card is, your limit is based on your, credit limit is based on how much you spend. But across the globe, certain banks, which I think in our country also, sooner or later, these products will be there. Your credit limit is based on, of your credit card, on how much CO2 emission, because of your spending, CO2 emission is getting added to that. And that's very important product which has.
So you have to spend less than to.
Yes, that's because you know what product you are buying. Suppose if I'm buying something which will have more CO2 emission, my credit limit will go down. And after a particular point of time, the way you earn points, once you reach your credit limit, your CO2 limit, your credit card gets blocked. So this is one of the very interesting product which I came across once reading about it. And I think though one bank in Switzerland, they tried for this product. See, again, at the end, it's a business. Though it didn't work, but the concept and the initiative was really great, and which I think down the line, the way we want to move ahead, and there's a push on the green financing, these products and some similar products will come into the market.
So, pardon me if I sound a little dumb, but maybe some of our viewers would also have the same question. Isn't it easier for banks to just, let's say, give a more enhanced or rather less interest on loans to a entity that is getting into sort of a green project, right? Or a project with a green element in it. If you do this green element, then your interest rate instead of 10% will be 9.7% or something. Or is it already there?
No, very interesting thing, and that is the thing which are passed to the customer, and that's a mandate. But unfortunately, even when the banks passed on this mandate, the execution of the project and all, they don't comply with the conditions. That's why the stricter norms has to be there. Today, as you gave an example, because if you are doing a green finance or green building or whatever you are trying to reduce the CO2 emission, I'll give you certain benefits. That's why you will do it. And if I reduce the your interest rate, but at the end when you're executing the project, if that is not being done, and that's not happening also, to be very honest, on practical, on reality, things are not complied with. That's why bank has to monitor and all, because then when the benefits are being passed, that has to be brought on the reality on the ground level.
You know, I'd also thought of that a lot of times, but we must understand that the primary objective of a bank is to earn interest. Because that's their business, right?
Yes,
so
that is true.
you can't bypass that. Having said that, a lot of these banks had tied up with international institutions. I mean, I remember there was a tie-up of SBI with ADB or PNB with KFW, whereby these entities provide a line of credit to the banks. And based on that line of credit, because that is slightly cheaper money, banks can lend that money onwards for cheaper resources. But again, that will not be for the big renewable projects. That is more on account of the smaller projects and more for the underprivileged sector to bring them up, while at the same time looking at green.
So one of the things in my mind was, suppose all these new, buildings that are coming up, the real estate development is happening. So maybe you give a 2 percentage points or not 2 percentage points, but at least maybe I don't know, 50 basis points or something, incentive in terms of, let's say you have in all the parking slots that you are creating in your, so all of them must have a charging point.
No, one I can give you the practical example. We did some transaction for Chennai, and that project was inaugurated by the CM of Chennai, and they had to procure the green building certificate. Without that, the bank didn't disburse the money. We were waiting for certification to come when the building was ready for certain OC and all. So that way it gets very critical, and that's why I'm saying when these certification are giving, that's where they do the check and balance, and the benefits are then passed on.
Good. It's good to see that some of those things are happening. Okay, let's come to the next question, which is on cross-border risks, and the question is for you, Nand. And as Indian BFSI firms participate in global financing now, right, or borrow from international lenders, what are the critical legal and regulatory risks that they should keep in mind?
So on the regulation front, like OFAC, FATF, that becomes very important. And when I say OFAC, recently we have been seeing how US has been sanctioning if there has been any sort of borrowing or lending happening to US sanctions nations, and we know which nations we are talking about. So that's something which banks has to be in compliant with. And not only that, even the regulation of the host country from where the bank is lending, that also needs to be taken care of.
Right, and there can be associated risks also, right?
Yes,
like you are lending to somebody who is not necessarily from that country, but might be linked to a sanctioned
and even anti-money laundering. Then the funds are not to be used for terrorism purposes and all, and that becomes very important and critical, and that's how they monitor it.
Any cross-border risk you want to highlight?
Not a risk as such, but I think it's more burden compliance by these institutions, because any foreign money coming in comes with its own set of parameters and reporting requirements. So, but no risk as such.
Okay, last question in the main section, and which comes to Karan. It's on deepening foreign capital. We've been getting a lot of foreign capital, but India wants to draw more foreign debt, right? Including through credit enhanced bonds and stronger debt capital market, which we've been trying to build. So what can we do to deepen more foreign capital inflows?
Yeah, I think one major positive step that has happened is the upgrade for India Inc.'s rating globally.
Yes.
So, you know, that's been one upgrade which should help
Yeah.
to deepen the market. But there are three or four, broad aspects that need to be sorted out. And when we talk to investors, this is what we get. The first is around stable legislation and judicial prudence, right? So we've all seen what happened with retrospective tax and the kind of implications that had on foreign investment. And touch wood, I think we've had a stable regime, but there are issues. For example, you deal with the Great Indian Bustard case, which is pending with the Supreme Court. There is billions of dollars of investment lying stale in Rajasthan and Gujarat till the outcome of that case, and we, hopefully achieving closure of that case sometime in December. But there has been stagnation for the last 2 years on account of that case, and this sort of makes investors nervous. So I think legislative stability and judicial prudence is an absolute must. We spoke a bit about IBC and how it shortened the enforcement timeline. Given the plethora of cases, I understand it's an issue, but we've got to figure out a way collectively of how to shorten enforcement, because we are nowhere close on those timelines compared to some of the other nations who have a shorter enforcement timeline. Land is a major issue. In any project that we are doing, land acquisition is always a hurdle. So we've got to solve for that problem. Probably digitization of land records should help smoothen the process. And often we've heard our clients talk about the irregularity in regulations between RBI, SEBI, and the regulator for Gift City. And it is a complex web, but I think maybe synchronization around these regulations will also provide some sort of comfort.
Okay.
And then you have smaller issues around the day-to-day fights that we have about trying to reduce the minimum average maturity in the draft ECB regulations further, removing caps for foreign money to come in. I mean, at one stage we want foreign money to come in, but then we're putting caps on that, both under the ECB and the FPI regime. So, removing those caps. So these are certain measures that would help to bring about more foreign capital.
Any other measure?
Rather, I would put it in a positive way, because the first question where you asked whether we are heading the progressive regulation or not. And as I said off later, as Karan was talking about ECB, so the government is trying to come up with those guidelines so that inflow of funds gets increased. Even PF direction. So everything is interlinked. PF direction is also why these regulations have come, because we were facing some problem. There were certain things which were not getting confidence of the foreign investors and all were not getting built up. Even SEBI, they are updating whatever is required to be done. So that way, gradually we are heading towards it. Well, corrections are always required. You learn from offshore entity, offshore market, how it progressed there. We try to adopt some, we fail at some. But the possibility and the process has to continue, and that way there has been lots of progress which has happened off late. That's how I think.
Great. So we finally come to the closing rapid fire, and let's make it rapid this time. Huh? So 5 questions. Okay. One regulatory trend everyone should watch in the finance space.
Artificial intelligence.
I'll second that, because RBI is already on that. They have formed a AI committee, so AI framework is already in the process.
All right. AI regulation. Watch out for that. One thing you'd like to see change to boost financing in India.
We need to come at par with the foreign banks and lenders, the way their compliances and confidence they have shown. Similar way, Indian banks also need to pick up on that front.
Okay.
Faster enforcement.
Faster enforcement. Yeah, you're backing yourself on that other answer. Wonderful. An underrated legal reform that the BFSI industry in India needs.
Again, seems I'll say what we said: cyber security, data safety, and all data privacy. Rather, I'll say. So those things becomes very critical for any finance institutions to be taken care of.
Okay. Karan?
Yeah, I'd think the legislative framework to resolve issues outside the bankruptcy code. We have the bankruptcy code, but resolving outside bankruptcy is as important, and we haven't hit that correctly as of now.
The mediation part, you mean?
Yes, the mediation,
There
the
has been some
resolution under the
movement,
RBI
yeah.
framework. Again, the regulations are fantastic, but the enforcement is where we need to act a bit more.
Okay, one word to describe your view of India's regulatory future.
Dynamic.
One word for the ongoing discussions around merging some of the PSU banks.
To compete with the foreign institutions, foreign banks, we want to come at par with them and have good banks. When I say good, strong banks in India in comparison to the.
So it's needed, not needed?
Yes, needed very much.
And it's a mega funding opportunity.
Thank you very much. That was a very, very stimulating session. It was slightly long, but I'm sure you enjoyed watching it as much as I enjoyed moderating it, and I'm sure our two gentlemen here enjoyed also participating in it. As we heard today, India's financial system is not merely supporting economic growth, it is also transforming the country's rise. The evolution of regulation, deepening of credit markets, and the strengthening of risk frameworks will define how effectively India can mobilize capital for infrastructure, for innovation, and for inclusion on the road to 2047. That's it for this episode of Season 2 of Transforming India, the Road to 2047, presented by Mint in partnership with JSA Advocates and Solicitors. I am your host Alokesh Bhattacharya. I'll see you next time. Till then, stay future ready. Thank you.